Welcome to the deep dive. Today, we're tackling something really important. We're peeling back the layers of a big company's financial report. Specifically, Charles Schwab's Q2 2025 performance. And this isn't just, skimming headlines.
Yeah.
It's about understanding what actually drives a company's health. We want to give you a shortcut to being, genuinely informed.
Exactly.
How did Schwab manage such strong growth this quarter? And what does it maybe tell us about the broader market?
That's the core question, isn't it? Because, you see, for a company like Schwab, the big numbers like revenue and earnings, they're just the start.
Right, the tip of the iceberg.
Precisely.
Yeah.
To really get a handle on their financial health, where they're headed, you have to dig deeper. Look at specific metrics, the details in their revenue streams, client activity.
Okay.
Those nuances are just, they're absolutely crucial for understanding where they stand now and maybe what shifts are coming.
Okay, so let's unpack those top-line numbers then. Charles Schwab, Q2 2025, that's the quarter ending in June. They reported $5.85 billion in revenue. Pretty robust.
Right.
That's a significant jump, 24.8% compared to a year ago. And interestingly, it actually beat the analyst consensus.
It did. By how much?
The estimate was $5.7 billion, so they beat it by 2.64%. Pretty solid beat.
Okay, yeah, it's decent.
And then on the earnings per share, the EPS, they reported $1.14. That's way up from $0.73 last year.
Wow, big jump there, too.
Yeah. And another positive surprise, it came in almost 4.6% above the consensus estimate of $1.09.
Okay, so this initial picture is looking very strong. When a company beats expectations like that, revenue and EPS,
Right.
it often signals something solid underneath. For investors, these surprises, they're really important.
Why is that?
Well, they can really influence how the market feels about the stock, shape the perception of its immediate future.
Sure.
And seeing those strong year-over-year numbers alongside the beats, it tells us Schwab isn't just growing, it's growing faster than analysts expected.
Okay, so beyond those big headlines, you said there are other numbers Wall Street watches even more closely.
Absolutely. This is where it gets, as you said, really interesting. There are key operational metrics.
The heartbeat of the business.
That's a good way to put it. Yeah. They offer a much deeper insight into Schwab's actual operational performance. These figures directly impact their overall health, their profitability.
So what are they telling us this quarter?
All right, let's stick through them. First, total client assets. Huge number. Schwab reported $10,757.30 billion.
$10.7 trillion. Wow.
Yeah. That comfortably beat the estimate, which was around $10,516 billion.
Okay.
Now, this isn't just a big number for the sake of it. Beating that benchmark, it's a powerful signal. Shows client trust, Schwab's massive scale, their ability to keep pulling in and holding on to serious capital.
Makes sense. What's next?
Next, net interest margin came in at 2.7%.
And the estimate?
It was just slightly lower, 2.6%. So a small beat, but this metric is critical for a financial company.
Explain that a bit more. What is net interest margin?
Sure. It's basically the profit margin Schwab earns from its lending and investing.
Yeah.
The difference between the interest income generated and the interest paid out.
Got it.
So getting a higher margin, especially now with interest rates kind of all over the place, it suggests they're managing their balance sheet really effectively.
Okay, so they're holding more assets, earning a better margin. What about client engagement? Are people, actually doing things on the platform?
Good question. That brings us to clients' daily average trades, or DATs. Schwab reported 7.57 million trades per day on average.
And the estimate was?
A bit lower, 7.28 million. So higher trading activity than expected.
What does that signal? Just market volatility or?
It can be a mix of things, but generally higher DATs signal robust client engagement. It might reflect investor confidence, maybe a more active market, or just Schwab clients being more active traders. And importantly, it translates directly into potential trading revenue.
Right. Okay, one more key metric.
Yeah, last one here is average interest earning assets, reported at $422.73 billion.
Also beating the estimate.
Also beating the estimate, yeah. That was $418.8 billion. This represents the total pile of assets Schwab earns interest on think loans investments.
Okay.
So outperforming here simply means they have more assets working to generate income, which directly boosts that net interest revenue we talked about.
So putting it all together, more assets, better margins, more trading, more interest-earning assets. It really seems like growth across the board.
It does look that way, yes.
But back to that big question, where's all this revenue growth coming from? especially that big overall jump. Let's dissect the revenue stream.
Okay, let's get granular. The biggest piece of the pie is net interest revenue. Came in at $2.82 billion.
Which beat the estimate, you said?
It did, yeah. Outperformed the average estimate. And crucially, look at the year-over-year change. Up an impressive 30.8%.
30%.
Wow. Yeah. Shows the strength of their core lending and investment activities. They're likely really capitalizing on the current interest rate environment.
Okay. What about trading?
Trading revenue, $952 million. This one basically came in right on the estimate.
So no surprise there.
Not really, pretty much spot on. But even meeting expectations, it's still up 22.5% compared to last year.
Still very strong growth then.
Definitely. Shows continued healthy trading volumes from their clients.
Now, this next one, this really jumped out at me when I looked at the numbers. Bank deposit account fees.
Yes.
$247 million, which was above the estimate. But the year-over-year change, it's kind of staggering. Up 61.4%.
It is remarkable, isn't it?
What on earth is driving that kind of surge? 60%.
You're absolutely right to flag that one. That 61.4% growth in bank deposit account fees, it's the highest jump across all their major revenue lines.
Yeah.
It strongly suggests a big increase in revenue from how client deposits are managed within Schwab's bank.
So people just leaving more cash sitting there.
Could be several things feeding into it. Maybe clients are keeping more cash in Schwab bank accounts instead of, sweeping it somewhere else. Perhaps Schwab is offering competitive interest rates on those deposits.
Makes sense in this rate environment.
Or it could just reflect a broader shift, clients managing their liquid cash differently in the current economy. Whatever the reason, it's a key sign that Schwab is effectively holding on to and, frankly, monetizing client cash.
Very interesting. Okay, what else contributes to revenue?
All right, moving on. Asset management and administration fees totaled $1.57 billion.
How did that compare?
This one was interesting. It met the estimate precisely. Bang on.
Okay. Still growing year over year.
Yep. Healthy growth, up 13.5% compared to last year. And within this category, we can see some finer details.
Like what?
Well, total managed investing solutions, think actively managed portfolios, brought in $589 million. That was slightly above estimates and showed solid 15.5% year-over-year growth. Seems strong.
Okay, so managed stuff doing well.
Right. But then you look at some of the more passive segments. Schwab's own equity and bond funds, ETFs and CTFs.
That's ETFs.
Collective trust funds, they're pooled investments, often used in retirement plans.
Gotcha.
Those saw only an 8.9% year-over-year change. And even slower growth came from Mutual Fund One Source and other no-transaction fee funds. That was up only 1.9% year-over-year.
Huh. So much slower growth there. What does that suggest?
Well, it could point to a shift. Maybe client preferences are leaning more towards managed solutions right now, or perhaps Schwab's strategic focus is pushing that way rather than the really broad, low-fee passive funds.
Interesting nuance. Any other revenue streams?
Just one main one left. Other net revenues came in strong at $260 million, significantly beating the estimates, showed an 18.7% year-over-year increase. So good performance from their other diversified income sources, too.
It really is fascinating how breaking it down like that paints a much more, detailed picture. You see the strong spots like net interest and bank fees and maybe some slower areas like certain passive funds. It's not just one big number.
Exactly. The nuances matter.
So, okay, we've dug into all these frankly, pretty impressive internal numbers. How has Schwab stock actually been doing out there in the market? Because, great company performance doesn't always mean the stock price follows perfectly.
That is a critical point. So over the past month, Charles Schwab shares, they've returned about 3.6%.
Okay, positive return.
Yeah.
How does that compare?
Well, the broader market proxy we often use, the Zacks S&P 500 composite, that saw a 5.4% gain over the same period.
So Schwab's stock, while up, actually lagged the overall market a bit recently.
That's right. Lagged slightly during this specific time frame, which, might seem a little counterintuitive given the strong quarter we just walked through.
And what's the current sort of rating or outlook on the stock?
Currently, the stock holds a Zacks rank #3. Zacks is a well-known independent research firm.
And #3 means?
It's categorized as a hold. Basically, their analysis suggests the stock is expected to perform roughly in line with the broader market in the near term. Not necessarily outperform, not underperform. Just hold.
Okay, so help me understand this a bit. We've got really strong internal numbers, right? Especially that huge jump in bank deposit account fees, beat estimates on key metrics. Yet the stock is lagging the S&P 500 and it's rated a hold. Why the disconnect? What might analysts still be worried about?
That's an excellent question. It really gets to the heart on market dynamics. It suggests that, yes, while this quarter was strong, analysts in the market might be looking beyond just one report.
Thinking longer term.
Exactly. Maybe there are broader macroeconomic concerns hanging out there, like what's the future path of interest rates?
Yeah.
That directly hits the net interest margin, which is so important for them.
Right.
Or maybe it's competitive pressures. The wealth management space is pretty fierce. It could also just be that a lot of the good news, the expectation of a strong quarter, was already sort of priced into the stock before the report came out.
Ah, so the market anticipated it.
Possibly, leading to a more muted reaction after the earnings. Or maybe the market just wants to see another quarter or two, wants confirmation that these strong trends are sustainable. There's always, a bigger story than just the quarterly numbers.
Right. Context is everything. Okay, so there you have it, our deep dive into Charles Schwab's Q2 2025. I think the main aha moment here, for me at least, is seeing how valuable it is to really dissect these reports. Go beyond just revenue and EPS, understanding things like total client assets, net interest margin, and especially those different revenue streams. It just gives you, the listener, a much more nuanced, more complete picture of the company's health, what's really driving things.
Absolutely. It's about connecting those dots.
Seeing the strategy unfold, maybe.
Precisely. And given Schwab's strong performance across most key metrics, especially that huge surge in bank deposit account fees we keep coming back to.
Yeah.
And yet it has this current hold rating. It leaves us with a provocative thought for you to mull over.
Okay, let's hear it.
What might all these numbers, particularly that deposit fee jump, tell us about the current psychology of individual investors right now? Are people getting more conservative? Are they choosing to keep more cash parked in bank accounts, maybe chasing those better interest rates instead of, say, actively trading or moving into riskier assets? Interesting question. Yeah, what underlying trends about how individual investors are engaging with their money? What can we perhaps infer from Schwab's operational success in this particular quarter? Something to think about.